Hi there, good afternoon. You're watching Markets at Noon on ET Now. I am Snehisha. With me is my colleague Kavita. And well, we're at the midday mark for the trading session, taking stock of where the benchmarks are at right now. 0.2% uptick coming in on the Nifty. So yes, very sharp recovery from the day's low. In fact, we recovered after open, still saw another slip, and now we seem to have recovered from that too, at least for now. 25,733 is where we are at on the Nifty. Sensex too seeing similar gains, 0.3% uptick over there. Nifty Bank also in tandem with the Sensex, you have a 0.3% gain on the Nifty Bank too. It's India VIX to watch out for, 4% cool off coming over there. The advance decline ratio very steeply in favor of the advances. So the broader end of the market is also doing well. That's the mid cap and the small cap space. If you take a look at the IT stocks, that is where all the action is in the market today. Nifty IT, the top sectoral gainer. You have Infosys, HCL Tech, Wipro, Tech Mahindra, TCS. All of them are doing very well in trade. Other than that, you have names like ITC that's doing very well, and Asian Paints also. Some of the consumption stocks, ITC, Godfrey Phillips, VST Industries, of course, some of these cigarette makers doing well. After brokerage channel checks suggest that they have taken adequate price hikes to now be able to fully pass on the extent of the rise in excise duty that the government had imposed, and this should not affect their EBIT per stick going ahead. On the flip side, it's names like Eternal, Hindalco, Shriram Finance, Tata Steel and Trent and a Power Grid that are some of the top Nifty losers. But sectorally, while we're talking about some sectors that are in focus, while IT continues to do well, about a 2.5%. In fact, now 3% uptick on Nifty IT. Following that, it's PSU banks, defense, FMCG, pharma, but the big laggard today is realty and metal. While we're talking about the realty space, a stock to watch out for is going to be Signature Global on the back of multiple news flows coming in for the company. And let's discuss all of that. We have Mr. Rajat Kathuria, the CEO at Signature Global, joining us on the show. Mr. Kathuria, hi, good afternoon, and thanks for your time. First up, let's talk about your latest development. You have entered large-scale commercial development with RMZ, where RMZ will acquire 50% stake in your subsidiary Gurugram Commercity Limited. Can you put some more color on this? So what is the execution timeline, rental incomes over here?
Yeah, sure, Snehi. Thanks a lot for inviting us to your show. So yeah, we've announced about setting up a platform with the RMZ Group for doing large-scale commercial, developments. Historically, we've been in a housing business where we've been doing, build to sell, developments, and that business in general's kind of, scaled up very well over the last few years. And, we are seeing good execution around that business taking place. But, we were looking for newer growth opportunities, and in the micro market, we see a lot of opportunity for more players to get into, yield development, assets, to be developed for a yield earning perspective, and that's where we are setting up this platform. So very complementary skill sets. RMZ Group's been doing more than 70 plus million square foot of annuity assets, and have very strong project conceptualization and even leasing capabilities. But little presence in the NCR market, whereas we understand the local land and approval nuances very well. We have good, project execution teams. So matching of minds and skill sets, we decided to do this platform. The starting position is around a particular project and an SPV, in which this project is housed. So we are offloading about 50% equity stake in a wholly owned subsidiary called Gurugram Commercity Limited. And against letting go of this stake, we'll be getting about 1,283 crores around approximately, from the RMC Group.
All right. Hi, afternoon, Mr. Kathuria. This is Kavita also joining in. Just want to understand now going forward, will growth be driven more by residential expansion, or we are also looking at institutional partnerships and commercial assets?
Mix of both, Kavita. Actually, on the residential side, I think the business is going steady. We've seen good growth over the last 3 to 4 years between, if I have to, just share a number between, fiscal year 22 and fiscal year 25, the business saw, sales CAGR growth of almost like close to 58 odd %. So that business has been growing, is very steady in terms of its performance. And, we expect good amount of, cash flows to come out of, the housing business basis, what we've been developing, selling, and the existing land which we own. Commercial is a new business for us, and that's why, since the business needs a lot of capital, we thought it's good to have the right partner while such projects are being executed. So we'll focus on both.
Okay. So that sounds good going ahead. Mr. Kathuria, I want to come to your Q3 financials and your earnings. This time around, pre-sales have been rather weak, and in fact, you've also gone ahead and trimmed your launch guidance from 17,000 to 15,000 crore rupees now. Talk to us about what some of the factors are for the industry at large, or is this some of the doings of the market that you are operating in that has led you to cut this, or is this some of the internal troubles that you're seeing at the moment?
No, there's no internal trouble. We sit on a very good land bank, which is mostly owned by us. We're not dependent a lot on third parties, and we fully understand what we do, and so it's nothing internal. As far as the market's concerned, to what I said earlier, we saw massive growth happening over the last 2 to 3 years, and on a high base effect, we are seeing like a steady position in that business. We're not seeing it, either like grow for one more year at a very significant pace, or it's neither nor is it coming down. So it's staying steady, it's staying range bound. We are achieving about 2,000 to 2,500 odd crores of quarterly pre-sales, and that's why we preempted and guided the market that we may see sales which are at similar levels as previous years. So that's why we kind of gave guidance to the market about, and launches are an alignment to the kind of pace at which the sales are happening. So it's a steady business. It's going well. It's quite profitable, and we are quite happy with the way a lot of projects are getting executed.
Okay, Mr. Kathuria, I just wanted to follow up on that. We've spoken about launches. You also touched upon your pre-sales number. For 9 months of this financial year, you're at 6,700 crores of pre-sales. Your guidance is 12,500 crores for the entire year, which means you've achieved only slightly more than 50% of your annual guidance for pre-sales. With just 1 quarter to go, do you think this gap is going to be covered up?
No, Kavita, actually, we did give commentary around this in our last investor update call, and even while we updated some of the key performance indicators to the exchange, which happens on a quarterly basis, that we expect the sales to be in the range as previous year. So this is something which we've also talked about previously, and last year we achieved upwards of 10,000 crores of sales. We expect sales for this pre-sales for this year to stay range bound.
All right, let's also talk about your average realizations that have increased significantly due to premium projects. Are you structurally shifting towards higher ticket developments, or how sustainable is the pricing momentum over there in that particular market?
Over the last 4 to 5 years, especially post-pandemic, we've seen land prices go up significantly, and while this is a trend in the Delhi NCR market, I think similar are trends in other markets, in the country. Even construction costs have gone up. In parallel, we've also seen a lot of infrastructure developments, changing the landscape in the micro market. So, a lot of new highways have happened in Gurugram. So in general, because of multiple factors, there's been a pricing reset which has happened. And hence, our prices have also increased in line with all these factors. So the idea is not to move out of mid-income housing, with the current land and construction costs, maybe affordable housing is not possible, but we do not intend to go into very high ticket value homes. The intent is to stay in mid-income housing, and, we are a very established and renowned brand around mid-income housing. So we do not intend to, get into any premium or very luxury sort of segments of the market.
Okay, and what kind of price appreciation opportunities are you seeing in this segment, Mr. Kathuria? Earlier, we were expecting a double-digit growth in terms of pricing going ahead. Has that expectation moderated at all?
Yeah, Kavita, I think the expectation has moderated, and we will be happier. We are more of volume players. We want to play by the volume, reach out to as many as customers and end users, and try to make their home ownership dream come true. We'll be very happy if the prices, grow only in single digits going forward.
Okay, Mr. Kathuria, this is Snehi on this side, but good to be chatting with you, and thanks so much for your time. Thanks so much.
Thank you, Snehi. Thanks.
Okay.
Snehi.
All right, viewers, on that note, time to slip into a very short break. We'll be bringing you more news and updates on the market on the other side, so stay tuned.